How's it, guys? Welcome back to FX Rhapsody. Today we're going to be looking at EURUSD, EURUSD dollar. It's going to be analysis on the 4-hour time frame and then also looking at the 1-hour time frame. We're going to be looking at what happened this week or last week, and then also, what we're going to be looking at for this coming week. For those of you that's new to my channel, go visit my website on the bottom left corner over here, where you can see some previous trading material. Some nice video categories for those of you that's getting started into trading. For those of you that's into trading, there's some nice strategies to follow as well. And then also some resources that you can download, and also COT reports. For those of you that's using the COT reports, I updated it this weekend, so that's for download for free on that website. And then also my preferred brokers, guys. These guys are absolutely brilliant. You need a reliable broker behind your side when it comes to trading, and yeah, go check them out. So let us hit the charts. So we're starting off with a 4-hour time frame on the EURUSD dollar, and what we saw, last week happening is price just forming, up and down, lower highs, and what we want to see is this consolidation breaking, and then it did break eventually, so we have a swing high and a swing low. So we take our Fibonacci from the swing low, from where price started breaking out, and now all we want to do is we want to wait for another swing high in the market, and that happened over here, as you can see. So you take your Fibonacci from this swing low, where price started breaking up, to that swing high, and then what you want to see is, or what you want to wait for is, the price coming back to that area between the 62 and the 79%. And as we can see, price just dipped into that area, and then that's a nice buy opportunity that you could have taken, and price just started shooting up. So that's one nice entry in the market. Exit point on that would be obviously this. I'm just going to highlight this for you over here. Right there, that's the previous high. Okay, liquidity taking out that previous high. Just going to make it a little bit bigger. So that's a nice little, quick buy opportunity up there, and it's just over 100 pips that you could have taken on one time frame. So basically, that's one currency pair. So now price started going down again. So it was in this, let's call it a ranging phase. Okay, so you see price dipping down, and then what I always do is, again, follow what I always say is you take your Fibonacci from the swing high where price broke that to that swing low. So I'm just going to show you again. So you have a swing high over here because price broke this structure over there, as you can see. Okay, I'm not taking it from this swing high because price went up, formed another point in the market, another high, and then dipped down. So I'm taking it from this tip of that candle to that swing low on that end. Okay, that's where price turned again. I made a nice little video about the break of structure and swing high, swing lows. For those of you that hasn't seen it, go back on my channel and go look for that video. So what you want to do is you just want to wait until price hits that area, and as you can see, price is dipping into that area. That's where you take your another sell entry. Okay, and eventually this will be your exit over here. But that I will show you more on the 1-hour time frame, what happened. Okay, so let's head over to the 1-hour time frame and let's see what happened there. Okay, the 1-hour time frame on the EURUSD dollar, price went up. For those of you that caught that buy, I also made a little video about how you could have caught this buy up on a lower time frame on the 15 minutes. So that's also on my channel. So where the price started swinging down, I'm just going to show you price started breaking, and this is where we entered on the 4-hour time frame, or the signal was there for the 4-hour time frame as well. So basically you take your Fibonacci from that swing high, where the market turned, and you're waiting for the swing low to appear. Okay, and that is this candle over here, as you can see. So price went up, and again you're waiting for price to hit that area between the 62 and the 79% area. That is where you want your order to be placed. That is where you're waiting for your sell order. Okay, so price dipped into that with that candle. As you can see, I'm just going to zoom in a little bit, just highlight it. That is where it breached that 62% area. You place your sell order. Okay, not a lot of drawdown on that one. That was pretty nicely done. Then what you want to wait for, or what you want to look at, or your exit area, is going to be this low over here. You see, that's the previous low. Because price is hunting that liquidity. It is hunting liquidity that's lying at the bottom. Okay, so that is your area that you want price to go to, because it gets drawn to those area, and that is it. And as you can see, that candle, just zooming in a little bit more, just breaking. Look at that. It just broke that area in the market, just taking out that liquidity, as you can see. And that is your exit area in the market. You don't want to hold on to your trades too long, especially when you're day traders. For that trade, again, you know, that's going to be another 70 odd pips on that currency pair. So just make sure that you grab those pips, guys. That's all you need to do. Make sure your entries is good. You have good entries. You know, I get a lot of comments and questions about, you know, I'm in this sell, I'm in this buy. For me, it's about getting that perfect entry. If you're missing it, if you are in the opposite direction or whatever the situation and you're taking big losses, just sometimes cut those losses and then wait for the next entry that's a little bit better, more perfect. You don't want to go too much into drawdown. And as you can see, using this Fibonacci method and also the fair value gap, guys, you will get your pinpoint entries, and make sure you have your risk in place, your stop losses in place. Okay, it is always difficult to answer a question about, you know, must I still hold my trades and this and that. For me, if I'm in a bad entry and my entry didn't work, I get out of the entry, get out of that trade, and I wait for a better entry to come, and then from there on, you know, that's where I take my pips. So yeah, that's all from my side. I hope you enjoyed this little analysis for this week. Sorry guys, for this week. I mean, obviously we're still waiting to see what price is doing. I'm just zooming in a little bit. Currently it is, just going to take this all out. So currently, as you can see, you have got a low, a high over here. We've got a low. So price is still within that range in the market. We still want to see what happens with price, you know, between this high and this low. Okay, this high and this low. Will there be another retracement? Okay, just going to do this, and I'm going to do that. Okay, if you draw your Fibonacci from the swing high to that swing low to that swing high, if you're waiting for any buy opportunities, okay, that could be the case. So let's see and wait and see what happens. We still need to, price still needs to do its thing basically and show us where it wants to go. Okay, so again, this is all from my side. I hope you enjoy this. If you did, don't forget to hit that like button, subscribe button, notification bell. Show me some love by hitting that super thanks. And keep an eye out for more videos coming towards you this week. So guys, I hope you've been having a wonderful weekend, and I hope you will have a wonderful, pipful trading week. Stay safe and happy trading, guys.